Well, welcome back. A lot of people have this idea of buying real estate, and there's so many different ways to do it. I think that over the last 5 years, 7 years, 6 years, there's been obviously a big change in investing in real estate. The image of real estate has probably come way down, although it does seem to be a little bit on the upswing. And Kurt Fisher joins us, principal and managing member of Plus One Capital Commercial Real Estate. Well, first, welcome, Kurt. How are you?
Thanks, man. I'm good.
It's good to have you, and I'm excited to hear about this because this is a way people can actually invest in real estate that is hands-on. I would call it hands-on and hands-off at the same time, if you could say that. But talk a little bit about what Plus One Capital is, and then what you guys do as far as helping people invest in real estate.
We find properties that we can add value to that either have been owned a long time by people, so the rents haven't kept up, the improvements to the apartments haven't been kept up, and so they're just not up to today's standards for what renters are looking for. And so
when you say that, I mean, you talk about adding value, and we're really talking about apartment buildings. This is not your average house that could add a story, or hey, we could take this, condo and remodel it. You're really talking about apartment buildings. When you say add value, you're making it more expensive for renters, and you're adding value more to your investors on that side. I mean, is that right?
That's correct.
And so when you talk about you talk about a full service apartment syndication firm, what exactly does that mean?
Ben, there's so many ways to make money in real estate, but my niche and the niche that my company is in is we find apartment buildings as close to Lake Union as we can. Between, let's say, 5 to 20 units. Generally, they're older buildings, 60s, 70s, or old bricks. A lot of those have spaces in them that are underutilized. Vacant spaces in the basement, storage spaces, laundry rooms, that you can add those to the existing apartments and have rentable square footage.
So, somebody out there who's renting one of these buildings may know, they might have gone, or maybe they have rented in an older building, and they know of these little areas that maybe aren't rented, or they know about, hey, gosh, this just doesn't seem to fit the best use. Is that kind of what you're getting at?
Basically, yeah, that's it. You've got some functional obsolescence because the buildings are older. They were designed in the 20s or the 60s. Lifestyles have changed. Land was not as expensive back then. Building costs weren't as critical back then. So there are some inefficiencies in the designs themselves. So you go in and you reconfigure, or you find dead space and add it to, you have a studio with dead space behind it. Well, that becomes a 1-bedroom.
And so you almost end up just maximizing the efficiency of a building, of an older apartment, to make more money for an investor who wants to invest in real estate.
Yeah, that's a good way to put it.
So when you find a property, let's say you find an older property as close to Lake Union as you can, and you're driving, you see Joey's, you see all the restaurants kind of there, and then there's all those other apartments, maybe Queen Anne, East Lake area,
Capitol
Hill. What do you do to some of these older buildings? I mean, is there a standard of things you do, or are there certain changes that you make, or is it really building by building?
Well, I guess the beautiful thing about investment property, income-reducing property, is there is no set rule. There's a lot of creativity that you can apply to each building. So each building represents a unique opportunity. It might be just simply cleaning up the apartments because the rents are really low. It's been mismanaged for a long time. Might be actually reconfiguring the units. It might be taking dead space and then adding the rentable square footage to the structure.
And so, just creating more livable, rentable space, which kind of seems like a no-brainer, right? You have space and you have people who want to rent it, and you can. Why don't older building owners think like this? I guess you wouldn't know. You're not one of them.
I'm not one of those people, Ben. But I think that if you've owned something for a long time, your basis in it is much smaller. And so when you're acquiring it in today's dollars, in today's market, you've got to figure out a way to maximize value, or otherwise it's tough to make,
Kind of like having an older car and having a little dent in it. You just don't get it fixed.
That for a lot of people, that's probably very true.
So what are some of those things that you do? What are some of the dents you fix, I suppose, in an apartment building?
Well, other than the things I just talked about, the biggest are updating the some of the things in the apartments, like washers and dryers are a big one. Most older buildings don't have washers, dryers in the units. You have a laundry room downstairs that everybody shares. So that's a big one. Dishwashers, disposals, doing countertops in the kitchens with slate granite, redoing the bathrooms, new toilets, sinks, plumbing fixtures, new plumbing, windows. I could go on and on.
So, I mean, it really becomes, you make an old building appear new for a renter.
Yeah. Yeah. And you take something that's old and tired and you clean it up and it becomes pretty much brand new.
Right. And so as an let's first, before we get into how people can invest and why it might make sense for them, you have some projects you've just recently been involved with that are in Seattle. And so these are some projects that, talk a little bit about maybe how you came across these and how what do you do with them?
Well, I've done a lot of projects in Seattle, but the most recent one that would be kind of notable is there was a 12-unit building that had been for sale for some time. It was 2 twin 6-unit buildings. It was very tired. It had been owned by the same family for about 30 years. When you saw it from the outside, you'd think it was hopeless. But to me, I saw an opportunity. It had been for sale for some time. I was able to structure the financing, which is also a big part of what we do. With seller financing, we went in, replumbed the building, windows, and redid every apartment in it. Every
apartment. You're basically, I mean, as somebody might go remodel a condo, you're doing every single unit.
Every single one.
Wow.
New kitchens, bathrooms, washer dryers, dishwashers, disposals.
I mean, the people who had rented it before that would walk into these new ones probably wouldn't even know what it was.
They wouldn't recognize it, really.
And so why does this make sense as an investor? I mean, why do people come and invest in this type of real estate versus maybe trying to do it themselves?
Well, people invest with me because I've got a track record and my company's got a track record of doing it. And for them to go out and try to compete, the market is very competitive. So you've got a lot of people out there looking for a very scarce amount of product. So when they're linking up with me and my company to invest in projects, they don't have to look for the property. They don't have to analyze it. They don't have to set up the financing. They don't have to sign personally on the debt for the financing. I do that. They don't have to operate it. They don't have to deal with when the roof leaks, calling the roofer, or when the tenant flakes out and doesn't pay their rent, starting the eviction process, which we have very little of. But basically, it's a way for them to invest, get the same returns that they would get if they were doing it themselves without all the responsibility.
And so you can kind of, I mean, when I said earlier about this hands-off, hands-on kind of approach, I think it's interesting because somebody can drive around and go, I own part of that building, and they can touch it and see it, and versus maybe there's other ways of investing. So you don't know where the buildings are, right? I mean, you could be in a larger investment and not even know where the buildings are, let alone maybe drive your wife by and go check out the building you own a piece of.
And they do that. They really do. They drive by. They like to, when they're going out to dinner, drive by and go, oh, I own a piece of that old bricker. And oh, by the way, I own a little piece of that one too. And I have investors that have been following me around for about 15 years, and they own bits and pieces of 20 buildings.
And so that becomes, I mean, just another way to kind of diversify, I guess, your finances and own a little piece of Seattle. And also, I mean, you talked about $25,000 to $50,000 investments. This is much less than it might cost to go buy your own, say, single family home to go, to try, or things of that nature.
Yeah, totally. I mean, and it's a way to diversify your investment in commercial properties too, because instead of, if you've got $300,000 you want to invest in property, putting that all into one property and then taking all the responsibility over it, as opposed to splitting it amongst 6 projects with me. I mean, that's a personal choice, but I think it makes sense.
Yeah. Well, Kurt, we just have about a minute left, and before we have to go to break. But talk about how somebody becomes an investor, or how that process works to start investing in this type of real estate.
I appreciate that. It's actually a pretty simple process. One is, you have an interview with me or one of the principals to make sure it's a good fit for both parties. We want to make sure this is supposed to be fun too. The second part is just filling out an accredited investor questionnaire, which just shows that you've got a reasonable net worth and you've got reasonable liquidity, and this isn't your last bit of money you're giving to me to invest in this property, which is part of the process. And then once I issue a private placement memorandum, sign the signature page for the operating agreement and give me a check. That's it.
and give you a check.
That's it.
And call it a day.
That's it.
And then is there some type of, do they get, what do they get down the road? I mean,
okay, so good question. So after closing, they'll get a welcome binder that'll have all the pertinent documents related to the operations of the property. And then every quarter we do a report that shows what the operations are. And once the property stabilizes, then that report will be accompanied with a share of their cash flow for the property. So if they own 5% of it, they'll get 5% of whatever the cash flow is.
So they start to get some cash out of it on top of owning a piece of.
Absolutely.
Yeah.
That's the paramount consideration. Isn't just to create value, but it's also to create a cash flow stream for the investor, which is why they kind of go around and just take little bits and pieces of stuff, and then they get little checks every quarter.
Yeah, well, Kurt, thanks so much for joining us again. That's Kurt Fisher, principal and managing member of Plus One Capital Commercial Real Estate, and it's a different way to invest in real estate that is certainly, as I said, it's hands-on and hands-off at the same time. You can go see the building, and you can touch it, and maybe he'll even take you for a tour.
I will.
He will.
Absolutely.
But you don't have to deal with the headaches and the leaky toilets and the leaky roofs. When we come back, it sounds like Kurt really does change the entire image of a building from front to back, inside, the kitchens, the whole nine. When we come back, we're going to talk a little bit about how people and how companies are creating images for you to find online. We'll be right back after this break.